Welcome to my channel, Failure Finance Lab. Today, I'm going to tell you a story about why even the biggest companies, the ones you think can never fail, suddenly collapse. These are hidden financial traps that most CEOs and investors never see coming. By the end of this video, you'll understand exactly why some of the richest companies in the world crumble, and what lessons we can all learn from their mistakes. Imagine this. A company worth hundreds of billions, suddenly losing half its value in just months. Employees panic, investors run, headlines scream, unexpected collapse. But here's the shocking truth. These disasters are not always caused by competition, bad products, or even greed. Sometimes the collapse is quietly built into the system itself. So, what are these hidden financial traps, and how do they quietly destroy companies from within? Trap number 1. The debt trap. Many big companies borrow massive amounts of money to grow faster, thinking they can pay it back with future profits. But the higher the debt, the higher the risk. One wrong move, one unexpected market shift, and suddenly, the company can't cover interest payments. They're drowning in debt before most people even realize it. Example. Remember Lehman Brothers? They were one of the biggest financial institutions in the world. But their excessive leverage, borrowing to invest in risky assets, turned into a ticking time bomb. When the housing market collapsed in 2008, it was game over. This is a lesson. Growth at all costs can hide dangerous financial traps that slowly poison a company's future. Trap number 2. Overextension. Sometimes companies grow too fast. They open stores, enter new markets, or launch products without enough preparation. Expansion seems exciting until it becomes a liability. Managing too many locations, too many employees, or too many products drains resources and creates chaos. Example. Think of Starbucks. In the early 2000s, expanded rapidly, opening thousands of stores worldwide. But by 2008, many locations were underperforming, forcing the company to close hundreds of stores and lay off thousands of employees. Too much growth, too fast, can feel like success until it becomes a financial trap waiting to snap. Trap number 3. Dependence on a single market or product. When a company relies too heavily on one revenue source, any change in demand, regulation, or competition can hit it hard. No backup plan means no safety net. Example. Kodak is a perfect example. They dominated film photography for decades but failed to adapt to digital cameras. Their reliance on one market led to bankruptcy, even though they had more brand recognition than almost any competitor. The lesson here: diversify. Never depend on one product or market to secure your future. Trap number 4. Mismanagement and hidden costs. Even profitable companies can fail if they are poorly managed. Hidden costs, inefficient operations, or reckless investments quietly drain money over time. By the time outsiders notice, the company is already in deep trouble. Example, Enron is a classic case. On the surface, it looked like a thriving energy company. But under the hood, complex accounting tricks hid massive debts. When the truth came out, the company collapsed almost overnight. Financial discipline and transparency are the backbone of any lasting company. So, what have we learned today? Debt can be deadly. Growth without control is dangerous. Dependence on one market or product is risky. Mismanagement and hidden costs are silent killers. Even the mightiest companies are not immune to failure. The bigger they are, the harder they fall, if they don't respect the hidden financial traps lying beneath their success. Now you know why some of the richest companies suddenly vanish from the headlines, and how understanding these traps can give you an edge. Whether you're an investor, entrepreneur, or just curious about the world of finance. If you found this story, make sure to subscribe and hit the bell. More stories about financial mysteries, hidden traps, and epic failures are coming soon. Thanks for watching. Failure Finance Lab.